Good afternoon and good morning, everyone. Today we have a webinar with 1911 Gold, President and CEO Shaun Heinrichs with us today. The format of the session will be an update from Shaun, followed by Q&A. If you have questions, please input them into the Q&A box at the bottom of your screen. And before we get started, as always, today's presentation will contain forward-looking statements. You can learn more about those on the presentation on the company's website. And welcome, Shaun. Thank you for joining us.
Oh, thank you very much, Magda. I appreciate it, and happy to have a chance to speak to everybody today. I think we've got a good breadth of topics to cover, and I'll try to leave time at the end, obviously, for questions as well. All right, so hopefully everybody's seeing that. We've put together a bit of a modified presentation for today, just to try to synopsize some of the activities that have brought us to where we are now, and what activities look like coming in 2026, but also a little bit more further ahead as well. So just to kind of summarize for people that are less familiar with the project itself, on this cover page, you can see really what is the strategic value of 1911 Gold and what kind of separates it from many of the other exploration and development and mining assets out there. And it really is the camp infrastructure, which is the mill, the underground mine. There's 4 underground mines here, an existing 1.1 million ounce resource, and a fully permitted turnkey operation. I think we've covered the forward-looking statements, but as always, just be aware that external factors may influence the outcomes of some of the things that we are stating in the presentation. So because we have a bit more time, I'll just spend maybe a minute or two on the history of this project. One of the things that really attracted me personally to this project was the history. What you find with these assets, which have been around for extended periods of time, is there's a lot of love in the region, particularly within the local communities, which grew up with the mine ever present and active and always providing a stable and long-term source of income and prosperity in those regions, which is why a lot of mining companies you see, tend to be very well received within the areas that they're active in. This operation is no different. It was originally discovered in 1911, which is where our name comes from. It was prospectors in Manitoba working closely with local Indigenous communities who went out into various parts of the province based on sectors, using different types of cloth to identify the different regions where they were prospecting, and returning and working together with those prospectors on areas that they thought were more exciting. The first discovery here was in an area we call the Gabriel Shaft. There's still a monument there today within probably 300 meters of the existing camp infrastructure, actually right in the middle of the town of Bessette. You can physically see it. There's still a shaft underneath there. It's obviously closed, but it's still very active, and you can really feel the history there. There are a lot of stories I could share about the project, but basically this is an area that got into production in the early 1930s, ran profitably for over 30 years into the mid-1960s. Experienced a large fire in the 1965 time period. And I actually recently found out that they continued to ship ore up to Flin Flon. So the underground mine operations actually did continue on until 1968, 1969, when they finally wrapped up. Following that, the operations changed hands a number of times. A lot of the surface infrastructure was gone, needed to be rebuilt, but there continued to be an active group looking to explore and develop resources on the project itself. So those activities continued right through until the late 1980s when it was picked up by Ray Gold. Ray Gold was the first kind of large company that came along and saw the potential here, invested hundreds of millions of dollars in rebuilding the underground infrastructure, building the mill facility, and ultimately having difficulty with the gold price in the early 2000s and never getting the opportunity to run it. Harmony Gold picked up the asset at that point, ran it for a couple of years, refocused on other parts of the world, sold this asset to a company called Sandgold, which many people up here know it by, and that Sandgold had a long history and a big impact on the operations as we have them today. Through their efforts, 3 additional mines were discovered within the property. A lot of development, a lot of new construction occurred, and Sandgold ultimately fell into difficulties in the kind of 2015 period due to an overly leveraged balance sheet and struggling kind of in certain areas of the operations, a lot of which we've managed to put our heads around, de-risk, and move forward on. So a lot of history here. We've inherited it. We've inherited a town very supportive. We've also got local First Nations communities very supportive of this project. What exactly do we have? First, let me just say this is located about 3 hours north of Winnipeg in the province of Manitoba, not well known for its gold deposits, but there are many, mostly to the north of us. We sit about 100 kilometers to the west of the Red Lake Cap, which you'll see, but we do sit within the western section of a very large, prolific greenstone belt area, which has produced well over 30 million ounces and still has over 40 million ounces combined across the entire belt area if you get to the Red Lake area. So we are sitting in a really good gold camp. We have a permitted mill, as I mentioned, expandable. Right now, it's historically ran around 1,300 tons a day, but it's been taken well over 2,200 tons a day. It's all about crushing capacity, something that we're very focused on right now. To build something like this in today's market is very challenging in terms of timing, permitting, and cost, particularly with the inflationary costs we've seen in steel and other infrastructure in today's market. So very valuable. 1.1 million ounce gold resource currently. That doesn't include any of the drilling we've done over the last 14, 15 months. We've hit into a couple of really good targets, which we'll talk about, but we do have visibility on growing that resource significantly over the next couple of years. And that resource all by itself, without us actually putting more drilling into it, shows significant upside potential within the mine workings. Everything in the underground, which you're going to see, actually sits in close proximity to the underground mine workings too. So minimal capex to get this restarted and to get right into the heart of the resource itself. The other big thing that we've done, and Klondike started it, Klondike's owned it for a short period of time, is accumulated a very large land position along this prolific gold belt that we sit in. So we've got over 62,000 hectares now. We've got numerous other past producers on the project area, most of which stopped in the mid to late 1940s, all very shallow, so completely open at depth, most stopping at around 130 meters below surface, which when you compare it to the True North mine, which we're currently active in, which extends almost 2 kilometers at depth. So you can see significant potential for that regional belt to grow and add significant amount of resource and production to this centralized milling facility. And I already mentioned this, but we do have very strong community ties. We're very active locally and working together with both the town of Beset and the local First Nations communities, which sit very close to us. One of the nice things I just point out is that this asset is clean, no sulfide, nothing really comes out of the ground other than gold. So when we put stuff into the tailings pond, it runs very nice and clean, which helps. And everything here is underground. So minimal surface footprint, easy to permit, but also easy visually to get community buy-in on, because we're not making a lot of disturbance here. This is a quick summary of how we got to where we are. I became CEO. I was originally involved in the spin-out from Klondike in 2018 as the CFO, and then I stepped into the CEO role in mid-2022. My goal and my direction from the board at that point was to start the process of de-risking the underground mine. This was before gold had kind of climbed out of that $1,900 per ounce level. We thought, look, this is probably economic at these prices already. Let's see what we can do. And I started that process. When I really was able to push things forward fast was when I managed to get Gary O'Connor to get involved. Gary came from Manitoba Gold previously, which he ran, but he's actually got a lot of experience in developing large-scale resources in various parts of the world. So he brought a lot to the table, brought a lot of credibility to the company. And with Gary's cooperation and hard work, we were able to rebuild the geology team and start to really carry things forward. From that point, we've reestablished the resource. We've put together kind of a world-class geology team that's got significant experience in drilling out operating mines. We've now brought in engineers. And on top of that, we've actually now got a full operational team at site, all very experienced in turnaround and startup asset projects. So I'm going to drill down into those here in a second, though. This is a good look at the leadership team at the very top. We've obviously just brought on Eric Vignette as Chief Operating Officer. He was a key add as we get closer and closer to actual production here. Eric's been working with us for over a year, almost a year and a half at this point. Came in through McKelly, who was our VPX, and worked with him closely at Rainy River. But before that, Eric's got significant experience in both open pit, but also narrow vein underground type deposits. There's over 3 different mines on his resume, which are very similar. And one of them, some of them are over in Quebec here, wells over in Tanzania, and then some in Central America. So a lot of experience coming up with ways to mine these narrow vein underground deposits effectively and productively, and open up different areas of opportunity within those areas. We've also got a board that's really come together over the last year as well. We've got experience in both building mines, operating mines, and financing mines on this board. Just to look at our share performance, obviously we've had a really good pickup in the last few months in this market. These assets, which are near-term producers, really attract a lot of attention. We've been setting a good foundation over the last year and a half of getting people up to date on the opportunity in this asset and where we see it going in the long term. Also showing the big resource upside potential on the asset and where we think we see kind of that 4 to 5 years out where those opportunities are as well. A big addition for us was bringing Eric Sprott in as a major investor. He's come into the last few financings as well, continued to add to his position. He's also recently purchased in the market. We have a couple of strategic corporate investors in there, small positions, but supportive of our strategy and always coming in on these financings as well. And then you do have a nice base of institutional ownership coming in there and a really good distribution for retail as well, which helps our volumes. One thing we've seen on top of the share price here is also a really nice pickup in our volume, which tends to attract higher quality investors and a lot of ability for people to trade in and out quickly without impacting the share price, which is exactly what you're shooting for. Almost 300 million shares outstanding, but remember, with that, you're getting a fully built, fully permitted operation. So capital risk at this point is quite minimal on this asset. We are actively rehabilitating and developing the underground with the funds that we've raised recently. We have well over, let's say, about $27-28 million right now on hand that we're working with. That's all being deployed in the underground as well as some refurbishment in the mill. But the mill itself is largely ready to go. We've gotten some good coverage recently through Haywood and Velocity. We're looking at potentially another one in the near term, but we're really starting to get a lot of traction in the market as people see this as a potential really good turnaround story in a really nice jurisdiction with strong support both locally and provincially. And this is where we sit. So I mentioned it earlier, but we're about 100 kilometers to the west of the Red Lake camp. We sit in the same West Uchi greenstone belt that defines that area. I'll just see if I can get out of that. And I'm mixing up my presentations here. So you can see this fault structure here, which extends right across to the east. That is the lower boundary of an ancient plate margin, which defines the crustal boundary for all the mines you see in that region. It's the main controlling structure for gold flows, mineral flows in that area, fed both the Red Lake mine, the Madsen mine here further south, but more importantly, our mine here in the west. And you can also get a sense of the size of our land position there. It's roughly equivalent to Evolution Mining over there in the Red Lake campsite. Just another view of the same thing. You can kind of see all the large producers here to the east, as well as 1911 Gold here to the west, centrally located on that property. And then I'll just kind of look here. You can see the various types of rock. The one difference between us and more the Red Lake camp is a lot of the gold at Rice Lake is quartz hosted, much more similar to, say, a Talisker type deposit. So it's very visible, white, easy to see in the underground, makes it much easier to mine, which is nice. You're able to trace it really well. You're able to follow the vein structure visually much better. And this is zooming in now on our property map. So you can see we got over 90 kilometers of strike length from one end to the other. That Wanepegal Fault, which runs on the north, we've got over 70 kilometers of that covered by our land position. We are looking to add a little bit more land in some of those areas. You can see that there's small holes, but we pretty much have everything that we need to have here. The mill itself is located right in the middle of the property here. And you've got road access coming right through the project area and down the southeast, as well as the power line. That green line is the power line coming through our property as well. What I would say is from one end to the other is about an hour and a half. The mill itself sits right in the middle. So to truck ore from the west or the east is roughly a 45-minute hauling distance. Everything's very close by, economic, and you've got road access throughout it. That power line is actually hydroelectric too. So what you also have here is low-cost energy and a lot of it. We've got over 11.5 megs currently on site, and we have visibility on increasing that another 8.5 here over the next year as we tap into more of that low-cost hydro from Manitoba Hydro to support the electrification as well as power up other satellite mines in the longer term. Now looking at this, what I would mainly focus on here is all those red dots. Each red dot is basically a past producer on this project. Now you've got the main one here, which has the 1.1 million ounce resource and has produced already historically over 2 million ounces. There is significant upside potential on that central one still. I think we can probably expand that at least double what it historically had done, if not a lot more, based on the drilling success that we've had to date. But when you look at that southeastern part of the project, it gets very exciting because all of those mines produce very high grade, 10 to 13 gram per ton, are very shallow currently, so they're all wide open at depth, and we see significant upside potential. Near-term focus is going to be on this Ogama Rockland one, which is right here. We plan to launch a drill program on there shortly. It's already got a 337,000 ounce, 8 gram per ton resource on it, shallow, very well constrained in a very small area with lots of upside potential at depth. So we will be doing a drill program on there soon, and we'll actually be looking to do follow-up drilling in 2026. And we'll be looking to add additional drill areas kind of here in central Manitoba, as well as probably down here in an area we drilled historically called the Tinney Project area, where we had a lot of good hits, and we do see a lot of near-term production potential as well. What these do, in addition to other areas of the project, is add basically a real satellite mine program for the future and form a hub and spoke type model on our existing footprint, everything within trucking distance, everything 100% owned by us. And currently none of it has any debt or any royalties on it. So nice, free and clear access to multiple deposits across the property. This is a quick summary of the infrastructure before we get a little bit more into the geology, but you do have a fully permitted and operational mill. We're in the process of scoping out a new crushing circuit for that mill. I think the old one was not optimal, so we are looking at ways to optimize that and increase the throughput as well at the same time. You have a fully permitted and built tailings pond, and you have 4 underground mines with massive amounts of underground infrastructure already in place. We are active in one. We're dewatering at one of the other ramp mines right now, and we'll get access to the rest of that soon. We can get about halfway down currently. But so far, the infrastructure has been really surprisingly good. The mines themselves have been shut down since 2018. And so far, from everything we found, everything's in great working condition. And we're just doing normal rehab and maintenance on all parts of the mine to increase our access as well as increase ventilation and electricity to all the areas we need to be active in. Next, we'll get kind of a bit of a zoom out on the actual mine itself. Over to the left part here, my left, is the town of Bessette. You can see the mine sits right next to there. There's about, on a good summer's day, there's about 300 people in that town. In the winter, it gets right down to maybe about 60, 70 long-term residents. About an hour and a half away from us to the southwest is a much larger town called Pine Falls. And then you also have Kenora, which is to the southeast of us, which is probably about 3 hours away. So we do have large townships nearby, good access to workforce in those areas, as well as you've got the city of Winnipeg, which is about 3 hours further south of us. So, and everything's road accessible from those areas to our mine. So historically, there was a a bus and a shuttle running. You've got the two First Nations communities close by as well, which actually do have mining people already in it from historic operations. Some of them working out of the province, so happy with the idea that they can come back home and work close to family. This is going to zoom in a little bit, and I won't spend too much time on these things, but this is the camp in the mill, the head frame there, the camp infrastructure in the center here now. You can see everything's fully built. You've got basically a 200-person camp already in place, kitchen, rec room, all that facility. You've got maintenance shop. This was built in 2014. It's in great condition. Core shack. We're actually going to have to expand that one because we're bringing more drills. More drills means more core, which means the geos need more space, which is all a good problem to have. One thing a bit unique to us because of the low cost of the power is this Bitcoin mine operations here in the background. They are using a lot of our excess power right now until we need it. We make a spread on that. It's nice. It's about $450,000 extra a year to us with no interruption to our own operations. So something that can run quietly in the background. You can see the tailings in the back here. I'm going to zoom in quickly on that and then we'll move on to the geology. Here's the old tailings, the west tailings, polishing pond, which is used as intermediary storage prior to discharge to the environment. You let the water go in there and then you settle and then you pump it out once it's drinking water standard. And then off to the east here, you have the new tailings pond. This tailings pond has about 3 to 4 years of capacity in it right now, and we have the ability to put 2 more large lifts on here, which will expand the life of this tailings pond probably by another 20, 25 years. So we'll get to a little bit of what we've been up to. So we redid the resource, strengthened our understanding of the geology, identified a number of targets on surface near mine that had never been drilled before. And that represented to us a very exciting kind of opportunity. We knew we had a large gold resource. We knew it was open at depth. But what we didn't know at the beginning is that we actually had several parallel areas that had similar scale and size potential as the current mined resource and remaining resource underground. What drove those is really these shear structures. So you can see on the map here, these dotted lines kind of coming in here. Each one's got a name, usually a bad name, a very confusing name. And then you also have a series of host rocks being reactive, porous, able to capture the minerals, the gold coming through those shear structures. So the shear structure hits the host rock, reacts, spreads out into the host rock itself, creates a large deposit, large enough for us to hit with a drill, and away we go. So here's one, this diacetic breccia unit, small, but can be quite deep. So Cohiba mine, I keep calling it small because it's small in terms of diameter. Doesn't mean it's shallow. Hinge mine, another diacetic breccia unit, a little bit larger, also very deep, completely open at depth. We've actually identified mineralization further down, which is about 500 meters off the bottom of Hinge, but looks like it's related. So we've got probably a big potential to add a lot of resources on Hinge once we can start drilling out that area in between. And now I'm kind of going in order of preference here. The next best host rock here is this shoreline basalt. What we found is that the shoreline is exceptionally good in these areas where it dilates. So you've got this large dilational fold here, and you've got the massive 007 mine, which was discovered late in Sandgold's life, was mined for the last 2.5 years of Sandgold. Really not mined well. This is one of the mistakes that we identified. Sandgold went in there initially mining off of inferred resources, which is very low conviction drilling. You've got wide space drilling. You lose track of the veins quickly. But we see a lot of potential in 007. It needs to be rehabbed because it was obviously mined out quite aggressively under them. Lots of resource upside below the bottom of 007. And then stepping out to the most favorable host rock on site based on productivity, the deposition of resources in this area is this San Antonio Gabbro, the SAM unit, which we call. This is the area we've had the most success this year. We've identified at least 3 zones. One being the San Antonio West, which is the intersection of Cartwright South shear structure with that San Antonio Gabbro. Never drilled on surface. You've got the mine here, which is comprised of those 2 shear structures. And lower down, they actually started mining this L10 shear structure. But above that lower part, so probably that top 800-900 meters, never drilled. This is our San Antonio Southeast target. We've been able to trace that down over 700 meters at this point. And then the latest discovery is this shore target, which is right here, associated with 007 shear structure, which created the 007 mine. There's no way that that doesn't have a significant amount of resource in it. We just need to drill it. It's further out with the winter coming now, or the winter upon us, actually. We are going to put a drill on the ice and start drilling it from surface as well. But we are drilling that underground right now. We need to drill. We're drilling the lower part. We now need to step back and try and drill off the upper parts. So 3 exciting targets. We think there might be a 4th, which you can see on here. We've not drilled it, but we've seen it on surface, and that's this 500 shear structure right here. This one's never been intercepted, but we think it's there. We're going to try and drill it. You step to kind of the south or the northwest, you hit that 007 shear structure. A little bit further northwest, you're into that L10, which is our SAM Southeast, which we already know they mined further down. You can kind of see it. It comes down from surface and gets into the mine workings kind of right around here. And so they actually did mine it in the past. So we know this is a mineable resource. The Hinge and L13, which are the historic producers back in the 1930s to 1960s, this is exactly what they were mining. The L10 was something they mined kind of towards the end, and then Sandgold continued on that one. And then Cartwright South, that's our San Antonio West. And the Cam shear structure is a new one that we intercepted, which was never historically known. So it's brand new. Zooming in a little bit, this is a look at our underground mine infrastructure. The green you see on here are our own mine model on this deposit. So this is where the resource is and what we've been able to put our own internal mine plan on. All those green shapes are mineable stopes. The gray areas, those are what's already been mined out. And you can see really good infrastructure, good bones on this asset. All that resource is right on the current development. So we're not building large drifts to get into these areas. And it's just going to spin around a little bit and try and step out and show you a bigger picture. So you've got the SG1 mine, which is a satellite resource off to the east, and then over to the left here, you've got all the existing underground mine workings, which shows where we're most active right now. This is a still picture now. So where we are currently is we've regained access to level 16. We've reestablished all mining operations on level 16. So we are very active in there with both mining crews and underground drills. For the first part of our drill program, we focused on doing confirmation drilling into areas that we'd like to test mine in 2026, which includes here, and another one which sits right over here. We call them the L10 and the Hinge. We're drilling those out as we speak. We also have one drill focused on drilling the shore target, which I mentioned, that 007 shear structure at depth. And then what we're looking to do is by February is gain access to this area again. So we're dewatering the Hinge mine. We're going to get access to this area first. Then we're going to put a drill in here, and we're going to be drilling into the San Antonio Southeast target. We want to do a few more holes. We've already extended it down quite a bit, but we need to add more holes down further at depth. The opportunity in all these areas that we've discovered from surface is the ability for us to actually mine ore in the upper levels and bring that to surface faster, which we think long-term results in higher tonnage, higher throughput from the existing shaft mine. That's before we even get into the ramp mines. So this has historically been a 900 to 1,000 ton per day underground mine operation, constrained by these shafts and constrained by the 3-minute transit time from level 26, which is where the loading pocket is right now. This is where you drop the ore to, crush it, and send it to surface. By creating these areas which we can mine higher up, and there are historic loading pockets on these upper levels, we think we can increase the throughput from the underground mine. In the background, we're working on getting these ramp mines up and running as well. You start to supplement the feed from the shaft mine with those mines, you really see a big increase in your production capacity from the underground. The mill, as we mentioned, has scalability. So if we need to increase the size of the mill, we will. This is a look at the resources just on a live view. So you can see how they all sit right within the mine workings themselves. Cartwright is new. This has never been mined. But what you're going to see on the next few slides is how San Antonio West closes the gap between Cartwright and the mine workings. So now we're zooming out. This is our drill program over the last 13, 14 months. This is what we've been drilling from surface. You can see all those little dots, those little colored dots is where we've hit the same target over and over again. So we've extended it now well over 700 meters along strike. And now you get a bit of a visual. Here you see the San Antonio West target, how it's extended and how it sits next to the Cartwright, as well as in close proximity to the underground mine workings at True North. You can get out there with about a 300-meter drift, and then you can actually access and drill the Cartwright resource as well, which is also open at depth. We could put another red arrow under that San Antonio West, or under that Cartwright resource. On the other side, you can see visually now the San Antonio Southeast and the Shore target. They sit just to the southeast of the mine. This area here is the San Antonio West. You can see how it hits the mine workings kind of right around here, and some of it continues on. This is actually like a corridor going down there. And then you can see how the Shore target continues on quite a bit at depth from there. So two really good targets. That if that 500 zone comes in, it's going to be sitting kind of right out here. So we obviously have to drill that. It's very conceptual. Don't take too much from what I'm saying there, but there does seem to be a lot of consistency in our, these shear structures and the host rocks. So we are expecting to find something. And this is a long section. Now we've just taken the San Antonio Gabbro and sliced right across it, and you're looking at it from the side. In the interest of time, I won't spend a lot on here, but now you can see all the drill holes we've done. This is San Antonio West. This is San Antonio, or this is Shore here. And then this is San Antonio, this is San Antonio West. This is San Antonio Southeast. And now we will be extending Shore. We're going to be we're going to be trying to drill that one lower down here off of level 16, which is right here. This is the level I told you we were active on already. We have all our ventilation and services and everything's already in place. We actually brought a few new pieces of equipment out yesterday, it was Monday, and those are going to get put to work here shortly. But you can see all these shear structures. These are the same shear structures I was pointing out earlier, and how they kind of intersect the mine, create these large deposits, and all are open at depth. You could basically put an arrow under all of this and continue on. These drill holes were put on here just to show you that there are areas outside of the resource which have high-grade intercepts. So we're going to be following up on all of these. There's no reason for these shear structures not to have continued further down. In the old days, they would have continued to mine the resource that was in front of them and drill ahead, as opposed to engaging in a lot of underground exploration drilling. That's something we need to change. We do see ourselves as a producer and advancing into production, but we also still want to wear that advanced exploration hat and continue to grow the size and scale of the opportunity here. And this is just another isometric view, looking at mainly just the shaft mine and how those targets fit in. Now here you can see how Cartwright has that really nice high-grade spot right at the end here. No drill holes below that. So that Cartwright zone is completely open at depth. If you look at the mine here, I think we pointed out earlier, but this is over 2 kilometers from here to here. So if you think about it, the potential is that each one of these is 2 kilometers at length. We know this one hits the mine, so that's not 2 kilometers. That's about 900 meters. But Shore actually hits the deep east right here, which is about 1,800 meters below surface, and likely continues on, of course. So we have over 1,800 meters of strike length on Shore. That actually gives it credibility as a target, knowing that it's actually in the lower part of the resource, decent grade as well. So lots of real upside opportunity, both from a production and scalability of underground mine production, but on the resource itself, we see a lot of growth potential in the existing mines, and we haven't even touched the regional areas yet. So historically, the operation struggled, as I mentioned, between 2013, 14, and 15. A lot of reinvestment in developing the other satellite mines on the property was happening, which is where a lot of the cash flow in the beginning went. It was developing new mines. It's how these mines work. You're always looking for and replenishing resources. And with the discoveries that they made, there was a significant demand for cash flow to be reinvested in those mines. Towards the end of that, the focus started to shift in terms of maximizing production, particularly with gold price kind of falling off. So the focus became, let's get tons to the mill. And a lot of those tons were not the kind of tons I would want to be sending to the mill. Cutting the grade from 6 grams per ton all the way down to 1 or 2 grams per ton, because you're not mining properly anymore. You're not drilling ahead. You're not doing your delineation drilling. You're not doing breakthrough drill holes, blasting into what we call the wall rock, which just means more waste coming in as you go. And that's how they were trying to survive in the last 2, 3 years of the mine's life. Too much debt. A lot of that debt was incurred with upsizing the size of the mill and battling to try and pay that debt off. Those were the challenges in the past. As I said, we are debt free. Anything we would do would be very flexible in the future. And we also think, obviously, at this gold price, we're not going to have any problem making this deposit extremely economic over the next year. This is a highlights the central controlling structure on the property, this Pluton. This is really the pressure system that drives the shear structures and the mineralization down both to the northwest, which is where True North sits. This is the True North mine, but also down here to the southeast, which is why you can see there's so much happening down here and why we think there's so much potential for a repetition of True North, maybe more than once in that region. Similar types of host rock as well down there. This is a look at kind of all the results we've achieved as a company. We didn't put the drill holes on here, but we have had a number of really good drill holes on the southeastern part of the project, very similar to what you see up in True North. High grade, narrow, sometimes getting a bit of a blowout, but typically kind of in that 8 to 10 gram per meter range. So extremely consistent with what we would expect to find on these types of systems. On this, I'll look at our time frame. We'll have a PEA done early next year. We're in the kind of final strokes of getting that done. We're about to launch a drill program on Ogama Rockland. That's going to be tied to a resource update, which we expect to have out by the end of Q1, early Q2. And then following that, we will be actively drilling in the underground, particularly after the PEA. We're going to focus a lot on delineation drilling in preparation for a 2027 restart of mining operations. We will have a PFS done towards the end of the year with an updated global resource, which will also include the Ogama resource. That 300,000 Ogama resource was not in the 1.1 million ounce resource. So technically, we have about 1.4, a little over 1.4 million ounces of global resource right now. We are looking to do a test mining run next year. We are drilling out the target areas right now. We'll make decisions with respect to the scope and size of what we do to feed the mill. We're going to get a crushing circuit in the mill, but if we start that test mining early, we'll look to have a mobile unit on site. The rest of the mill is functional, and we are getting all of those areas ready to go right now. Long term, we're looking at a 2027, kind of late Q1, 2027 startup of full operations at that point with the brand new crushing circuit, completely rehabbed underground mine, drilled out. We're looking at well over 30,000 meters of drilling between here and there to get that up, get that all ready to go, tighten up the drill spacing in the underground and in preparation for a restart. Mining is going to focus primarily on the higher up part of the mine initially, and then we'll start to move down into the lower levels of the mine by the second year. Some of the really nice high grade material is in those lower levels. So that's really kind of presents a good upside for year two as well. This more kind of what I've already been talking about. We are going to be very active also in the regional. We're looking to continue to build that pipeline of projects across the property. We see a lot of upside potential in that southeastern part particularly, but we have other targets which have been really good in terms of surface results and some of the drilling that we've done historically. We were drilling out a number of areas between kind of 2019 to 2022. A lot of that's still on the table. Nothing's really been taken away. So when you're thinking about 1911 gold, the way to look at it is you've got several things to get excited about. One, and the key thing is near-term production potential. Take advantage of these gold prices, have gold going out the door, 40, 50,000 ounces to start, showing visibility on getting to 60, 70,000 ounces by the second and third year, and then also show visibility for much more growth down the road. We're obviously going to push down that path and prioritize that ahead of everything else. But on top of that, you've got near mine growth potential, which I've highlighted with those 3 zones, potentially 4 zones. And then you've also got a large property package with multiple regional targets, brownfields type projects, given their past producers. Some of them have resource on them. And then you've actually got multiple greenfields type prospective areas on the property where we've got really nice high grade results on surface from sampling programs we've done in the past, as well as a few areas we've actually drilled, which have never been drilled before, and we were able to get some pretty decent intercepts out of those. So lots of really big catalysts ahead for us. Particularly 2026 is going to be a really big year for the company as we move towards that production and really build out this resource, and then into 2027 and start growing the size of that production potential. I've touched on a lot of this. Safe to say this is a really nice, clean operation, which is part of the reason I'm very happy to be involved. It's nice to be able to sleep at night knowing you're doing the right thing, both for the community, the province, and the people that are working for us. And that's the bulk of the presentation. I'd like to open it up for questions, and I apologize for running a bit long, but hopefully I can address any key questions that came up.
Thank you, Shaun. So can you give us a bit of how you think about balancing the over 60,000 hectare land position versus the 1 million ounce resource base? How do you prioritize between restarting operations versus resource conversion and expansion?
That's a really fair question, because we've kind of defined ourselves as a bit more of an advanced explorer up until this last probably 4 or 5 months. The big shift for us came with the hiring of June Kim. I keep giving him recognition, but was really to see somebody actually able to put a mine plan around our resource. It was one thing to be able to build a continuous resource, but to actually have someone say, look, I can put about 550,000 ounces of this into an actual mine plan. I can give you numbers around it, and I can give you grades around it. That gave us the comfort and confidence to go out and start focusing more on the mine planning. That's also what we started building the PEA on, the preliminary economic assessment, and hiring Eric was obviously a big part of advancing that as well. We're much more focused right now, I'd say, on the mine development side, which means we will be shifting away from exploration drilling. We might still have kind of one drill going at all times on advancing those targets that we've developed, but a lot of the other drills, which could be up to 4 other drills underground by kind of March, April, will be more focused on delineation drilling to try and upgrade resources, bring in as much inferred into indicated into measured as we can. So when we do the PFS towards the end of next year, that we've established a much more robust resource to convert into a reserve as part of that output. We know there's been a reserve on this project before it shut down. There was already about a 400,000 ounce reserve on it. So this is not something that is conceptual. We know that we can stitch that together. We need to do some survey work. We need to do some more drilling. Average spacing for us is going to be around 15-meter spacing between holes to get it to that level, which is not bad for an underground narrow vein resource like this. It's because of the continuity. But we will continue to have a component of exploration, and we will likely always have a surface exploration program going. That may only be one drill, but we will look to continue that activity to the extent that we're capable. But once you start mining, your focus really does shift a lot more to conversion.
Got it. Thank you. And with a recently closed life offering private placement for up to 23 million Canadian, how are you thinking about capital structure for a restart and drilling while minimizing dilution? What funding or financing paths do you see?
Right now, we continue to keep a lot of our options open because we are so near the potential to be cash flow generating. The opportunities for non-dilutive financing are becoming more and more readily available. Following the PEA in particular, we'll start to open more doors. What we want to do is obviously manage our capital structure closely. And I think one thing we've been successful at doing is always raising money at higher and higher levels. So we're not, other than our 2023 financing, which was a change of focus financing, we've managed to maintain, higher prices as we went and minimize warrants as well, in order to keep that capital structure healthy. Now we are looking at other options, and I think we'll see a lot of those come to fruition. What I don't want to do is to try and push this into production on a shoestring and be hamstrung by a lender that's not cooperative and has different goals than the company and its shareholders. So we need to maintain that balance at all times as well. But I do think really nice options are coming our way, and particularly the further along we go.
Got it. Thank you. And the updated 2025 NI 43-101 resource covers the underground resource base. Do you have a sense of the timeline and drill density to convert a portion of that resource into reserves?
Yeah, this is a tricky question. And everybody on the call should keep in mind that I'm a I'm a finance background, but my understanding is, that we need to probably do a significant amount of drilling over the next year. And I've seen that on the, even on the chat rooms that, this company needs to drill this out. We definitely do. And we definitely need to drill, probably in the neighborhood of 30, 40,000 meters to get to a level where, we've got a starting point for 6 to 8 years of production. Do we think that we can continue to add and replenish that following that? Absolutely. If nothing else, this is a resource that's shown that it's continuous, and that you easily convert as you go. We will look to build up that large resource inventory in advance of restart so that people can see there's a lot of, they can see there's a long-term life here. But I can tell you confidently that we will be able to replenish those resources consistently year after year by continuing to run that kind of a drill program, and continuing to, and then we can probably make quantum, not to overuse that, big, large leaps ahead in terms of the resource size by having those exploration drills going as well, because we've got a number of advanced target areas around the property. But yeah, no doubt there is a significant amount of delineation drilling ahead of us over the next 12 months.
Got it. Thank you. And just touching on valuation, relative to other North American juniors or near-term producers with similar resource potential, where do you see 1911's valuation today, and which catalysts do you think are underpriced by the market?
Yeah, no, it's look, I think we've had a really nice run. We've had some recognition in the market of the work that's been done to date. As a management team, we've really focused over the last year and a half on the project, de-risking the project, showing there is alternatives to the way it was done in the past, and that we have a team that's capable of doing that, but also getting in front of multiple new shareholders. I can tell you honestly, there's still way more people, particularly to the south, that have never really heard of the project. So I think there's a significant amount of room to continue to grow the shareholder base in this company over the next year as we get closer and closer to production. But with that, I kind of have to say that I forgot the initial question. So do you mind repeating the last part, because it was a good question?
Which catalysts do you think are
Oh, okay.
underpriced for the market?
Sorry. Yeah. So, but what I think is still missing in the market is that there is more to this company than the near-term production, which is what I think we're getting some value for finally. What people are still not valuing us on is all the upside. What I've tried to show without being too explicit is that this resource could be multiplied many, many times by the work that we're doing right now. And also with the addition of those new target areas, we're actually opening up upper areas. So you are looking at the potential for a significant increase in throughput with minimal capex on this project. And that's just by rehabbing old areas, bringing loading pockets that were existing in the upper levels back online, tapping into new resources that we've mined and discovered over the last 13, 14 months as we continue to drill in those. That's not captured in there. And then what's completely not captured in there is if you took away the mill and the mine and just said, "Ooh, look at the 62,000 hectare land package," which all these areas that want to be, are sitting there waiting to be drilled out and potentially are actual new mines. That's that's got a significant amount of value in this market, particularly at this gold price. And a lot of people would love to have the regional package that we've got here. And that's not baked in. That's what I've always found in this company. People will value certain parts, but they don't seem to put the whole thing together. I think as we continue to do our work over the next 12, 13 months, we're going to start to get a lot of recognition in those areas as we tighten up the story, show the potential for those areas, and show kind of where that takes us over the next 5 years.
Excellent. Thank you, Shaun. Was there anything else you wanted to cover that we didn't get a chance to cover today?
No, I think other than me losing my train of thought earlier, I would just again like to thank everybody for sticking around for 50 minutes on 1911 Gold. I appreciate everybody's interest and attention on the company. I think we're going to do some really interesting, great things. I also want to give a nod out to the team we've built at site. I'd say it's world class. We brought in a number of operators, both on the mill and the mine side. We're supported by high quality contractors, most of them local. So we're seeing a lot of support on those areas. I'd also like to thank the town that's continued to support us, continued to approve our drill programs off of people's backyards, showing a lot of faith in the direction we're going. So yeah, that's about all I could really add here. I think it's an amazing asset, and I look forward to seeing it back in production and working closely with Eric and Gary and McKelly and his team in developing this and growing it.
Thank you, Shaun, and thank you for supporting our charity webinar series.
Absolutely.
And thank you to the audience for participating. If anybody has any further questions, you can email info@adcap.ca and we'll pass them on to Shaun. And thank you, everyone. Have a great afternoon. Bye.
Thank you.